For a lot of people, the idea of dividend investing doesn't seem like the most thrilling way to build wealth. And to be fair, investing $10,000 into a stock that yields 3% would only pay you $300 a year, and that doesn't seem too exciting. Even if you buy a dividend stock with a high yield of 8%, a $10,000 investment would only pay you $800 a year, and these high-yielding stocks typically underperform the market long term. So at first glance, it's easy to see why people get discouraged with dividend investing. But that's because there is something that most people don't understand about dividend investing, and this concept is what could allow you to make over $500 a month in dividends from a one-time $10,000 investment, and that's the equivalent of a 60% dividend yield. This isn't some new concept or secret, and it's actually the exact same method Warren Buffett used to achieve a yield on cost of over 50% on his Coca-Cola position. It's the concept of dividend growth. Let's look at a quick example on how a one-time $10,000 investment could potentially pay you $500 a month in dividends. For this example, let's use my automated spreadsheet available on tickerdata.com at the link in the description. We'll come over here, plug in LOW and hit enter, and we can see the data for the Lowe's company will automatically load in. Now, right here, we can see the starting dividend yield for Lowe's sitting at just 2%. Again, this is a big reason why a lot of people can't get excited about dividend investing. But here's what you have to understand. Some companies like Lowe's increase their dividend payments at a very rapid rate. For example, if we look in 2013, this company was paying out 68 cents per share in dividends, but if you look in 2023, it jumped all the way up to $4.30. And as of right now, they're paying out $4.60. So over a 10-year time period, they have a dividend compounded annual growth rate of 18.82%. To put this in even more perspective, let's jump over to Seeking Alpha. If we click on dividends and click on dividend yield, we'll scroll down, and if we look at the past 10 years, we can see how the starting dividend yield for Lowe's has changed over the past decade. And for the most part, we can see that starting dividend yield was sitting at about 2% or even lower at about 1.5%. So historically speaking, this company has pretty much always had a low starting dividend yield. But again, we have to remember the dividend payments from this company are growing. So if we scroll down, we can look at the dividend yield on cost over the past decade. And if we look at the yield on cost, if we bought this company 10 years ago, we can see it's sitting pretty close to 10%. So what this is telling us is that due to dividend growth, our initial investment that we made 10 years ago would now be yielding 10%. That's starting to sound a lot more appealing. But here's where things get really crazy. If we come over here and zoom out even more, if you bought Lowe's with their low starting dividend yield 30 years ago, you would now have a yield on cost of over 120%. So again, for example, if we invested $10,000 into Lowe's in 1994, we'd now be getting paid $12,000 in dividends every single year. We'd literally be making more in dividends than our initial investment every single year. So what does this mean? Well, initially, it means it'd pretty much be impossible to make $500 in dividends every single month from a one-time $10,000 investment, but over time, this does become possible. So how long would it take to make $500 every single month in dividends from a one-time $10,000 investment? And I built out an entire financial model to answer that question. And in this model, we're assuming a one-time $10,000 lump sum investment with a price growth rate of 7% over time and a dividend growth rate of 8.5% and a starting dividend yield of 3.5%. And for reference, the popular dividend growth ETF SCHD has a starting dividend yield of around 3.5%, and over the past decade, it's seen a price growth rate of around 10% on average and a dividend growth rate of around 11.5% on average. So we're actually being a little bit more conservative with our projections than the SCHD historical averages. And what I've done is I've modeled out how this would perform over a 30-year time period so we can find out how long it would take for us to be making $500 every single month in dividends. Now to start out, let's assume we're reinvesting all of our dividends. From this chart, we can see the growth of our dividend payments grows exponentially. So let's dig into this a little bit deeper. Again, remember, we're waiting to see how long it will take for us to make $500 every single month in dividend income. And to start out, it looks like we're making about $29.37. So let's scroll down and see how long it takes us to get to 500. And I've scrolled down a little bit, and it looks like after about 5 years, we'd still only be making about $53 every single month in dividend income, meaning $600 a year. Let's go ahead and keep scrolling down. We can see after about 11 years, we're making around $115 every single month in dividend income. And if we keep scrolling down all the way to around 20 years, we can see we'd now be making around $360 every single month in dividend income. And if we scroll just a little bit further, we can now see right here, $500 every single month in dividend income would come in our 23rd year. Now, I know this seems like a long time, but keep in mind, this is from a simple one-time investment of just $10,000. And $500 every single month in dividend income would mean $6,000 every single year from a one-time $10,000 investment. And also keep in mind, during this time period, the total dividend payments we would have received would be over $45,200, and our account value could be over $124,000. But here's where things start to get really crazy. It took 23 years to get to $500 every single month in dividend income. But watch how fast this doubles to $1,000. If we keep scrolling down just a little bit further, we can see in our 28th year right here, we would then be making over $1,000 in dividend income every single month. It only took 5 more years to double that $500. And this is due to a concept known as the snowball effect. The dividend snowball effect takes place when you buy quality companies that increase the amount they pay out in dividends every single year, and you also reinvest those dividend payments right back into your portfolio. And if we come back over to our chart, we can see the dividend snowball effect is why our monthly dividend payments are growing at an exponential rate. Again, 23 years to reach that first $500, and then just 5 more years to reach $1,000 a month in dividends. Now, how would this change if we don't reinvest dividends during this time period? Again, we can see in this scenario, we're assuming we are not reinvesting dividends, and after an entire 30-year time period, we're still not making over $500 a month in dividends. We'd only be at $337.12. That's a massive difference. But if we do reinvest back into our portfolio, we could see at the end of a 30-year period, we would be making over $1,233 every single month in dividends. Again, this is all from a one-time $10,000 investment. So if we compare these two strategies, reinvesting dividends versus not reinvesting dividends right next to each other, we can see it's a pretty radical difference over time, and the difference continues to grow due to the snowball effect. Now, we can rapidly decrease the amount of time it takes to get to $500 a month in dividends by making simple, small contributions to our portfolio every month. Let's go ahead and say we're going to make monthly contributions to our portfolio of about $250 every single month. Not a massive amount. Again, assuming we're reinvesting dividends, if we jump back over to our model and start to scroll down, we can see we get to this point much faster. After just 14 years, we're making over $500 every single month in dividend payments. This is simply from a $10,000 investment to start and $250 monthly contributions. Now let's make one more change. Let's say we're going to be aggressive and contribute $1,000 every single month. In this scenario, we can see it takes a short amount of time to reach $500 a month, and in fact, right here, we can see it only takes a little over 7 years to reach $500 a month in dividend income. And again, the compounding effect really starts to take place after this. If we scroll down just a little bit further, we can see it doubles to $1,000 in just 11 years. And if we scroll all the way to the bottom of our 30-year time period, this is where things start to really get crazy. We can see at the end of our 30-year time period, we could be making over $14,500 every single month in dividend income and have an account value of around $3.3 million. So yes, at first, dividend investing doesn't seem exciting to most people, but that's because they don't understand the snowball effect and they don't understand dividend growth. In fact, my personal dividend portfolio is now paying me $457 every single month on average. And I've even had months where it's paid me as much as $934. So dividend investing might not seem exciting at first, but it can be incredibly powerful when you let the compounding effect take place. The end goal for my personal dividend portfolio is to one day be able to live off my dividend payments. That's for my dividend payments to cover all of my life expenses. So if you'd like to join me on this journey, then be sure to hit that subscribe button. And like always, if you'd like to be able to download any of my spreadsheets that you saw in this video, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.